Thanks, Matthias. So I would like to talk to you about the AFC Asia Frontier Fund today, which is a very unique strategy which offers very strong returns since inception, but also at the same time offers investors diversification benefits and also local relations. But before I get into the strategy, I'll just talk about introducing our firm, Asia Frontier Capital. It was established in 2013 by Thomas Haga, who's the founder. I have been with the firm since day one. And besides the AFC Asia Frontier Fund, which both me and Thomas co-manage, we also offer 3 country-focused funds, which is the AFC Vietnam Fund, the AFC Iraq Fund, and AFC Uzbekistan Fund. So we manage about $120 million in total. And besides me and Thomas, who manage the AFC Asia Frontier Fund, we also have people on the ground. For example, Vicente in Ho Chi Minh City managing a Vietnam Fund, Scott in Tashkent managing Uzbekistan Fund, and Ahmed in Baghdad, Iraq managing our Iraq Fund. And as I mentioned, Thomas is the founder of Asia Frontier Capital. And before Asia Frontier Capital, he spent a lot of time at Julius Baer and LGD Bank, and he's been in Hong Kong for more than 20 years. As I mentioned, I've been with the firm since day one. And as part of managing the AFC Asia Frontier Fund, I cover markets predominantly like Bangladesh, Georgia, Jordan, Kazakhstan, Oman, Pakistan, Sri Lanka, and Vietnam. And of course, I have a grip on what's going on in Uzbekistan, Iraq, and the other markets. So pretty good grip on what's going on in pretty much all our markets. And before I get into the strategy of the AFC Asia Frontier Fund and why you should focus on Asian frontier markets, I'll just give you a quick introduction as to how we define what are Asian frontier markets. So as this map shows you, we invest in countries all the way in the west, which is Georgia, to all the way in the east to Papua New Guinea. So it's quite a large geographic region of countries that we invest in. And how do we define these Asian frontier countries? So we have the MSCI Global Frontier Index. And from that MSCI Global Frontier Index, we invest in all the countries which are in Asia. So for example, Bangladesh, Pakistan, Sri Lanka, Vietnam, Kazakhstan, Oman. And then we also classify Asian frontier countries, which are those countries which are not currently part of any index whatsoever. So for example, countries like Mongolia, Iraq, and Uzbekistan. So that's how we define our universe. And why should you focus on Asian frontier markets? So very broadly, Asian frontier markets offer a very compelling opportunity in terms of economic growth. Many of these economies are growing from a very low base, and therefore you have GDP growth rates, for example, 8% for Uzbekistan, 8% for Vietnam. At the same time, it's not just about economic size. You also have a large young population. You have very favorable demographics. So for example, Pakistan's population is almost 250 million people. It's young. So, the Asian frontier countries offer both economic size and also a large demographic, which is very favorable. But besides that, pretty much all the countries in the universe are domestic-driven stories. Again, coming back to my point of favorable demographics, you have a strong consumption theme for the long term over the next 10 or 20 years in our markets. But a very important point is our countries, the stocks in our Asian frontier universe are extremely under-researched. You don't have the large banks like Goldman Sachs or JP Morgan covering stocks in Bangladesh, Pakistan, Sri Lanka, or even Vietnam, and definitely not in Uzbekistan or Iraq. So that allows us to basically go on the ground, meet companies, meet management teams, and allow us to take a long-term view on stocks and generate very strong returns and make alpha. And that's the key edge that we build to the table. We're on the ground in our countries, meeting companies on a regular basis. And why should you invest? Why should you focus on and have the AFC Asia Frontier Fund on your radar? So number one, the AFC Asia Frontier Fund is the only fund out there, and we are the only fund management company offering a product which invests in listed equities only in Asian frontier countries. There's no one else doing this. Besides that, we've been doing this more than 10 years. We have a 14-year track record, so we kind of know what we're doing, we know what we're talking about, and we know what we're investing in. In addition to this, valuations for the fund at 7.3, at a P of 7.3 times are close to its all-time low. So again, very attractive valuations backed by strong growth. And as I mentioned earlier, for example, we are on the ground meeting companies, which is a very important part of our investor strategy. We do more than 200 company meetings on an annual basis across the universe, across our markets. And more importantly, both Thomas and me have been managing this fund since inception, so there's been no turnover in the portfolio management team. And also for investors, a very important point is this product is scalable. So these are on a combined basis, these are large economies, these are large stock markets. So this product can easily go up to $500 million in AUM without affecting or negatively affecting our performance, which has been very strong since inception. And I ended the previous slide with the word performance. And as this chart shows you, this is the performance of the fund since inception. So pretty strong returns since inception of the fund, almost 125% in US dollar terms in total returns since March 2012. And especially the last 5 or 6 years, we've had so many economic and geopolitical shocks, especially affecting emerging markets and frontier markets. We had the pandemic, we had the war in Ukraine, we had the very aggressive US Fed in 2022 and 23, we've had the conflict in the Middle East. in the last 3 years, which has escalated in the last probably 6 weeks. But despite that, returns have come through. And that just shows not only the resilience of our countries, but also the resilience of our investment strategy in terms of allocating capital to countries and also picking stocks in our country universe. And especially in the last 3 years, returns have been extremely strong in our markets and for our fund. Annualized returns in dollar terms has been almost 21%. Again, that's outperformance against all the larger emerging markets and also developed markets in the last 3 years. And I'll just give you a quick example of how we think about picking stocks, how we think about our investment universe, how we think about our ideas. So this is Lucky Cement, which the fund holds. It is the largest position in Pakistan. It's the second biggest stock position in the fund. Lucky Cement is leveraged to Pakistan's growth. It's got exposure to cement, to automobiles, to chemicals, to power plants, and also international operations in Iraq and DR Congo. But more importantly, the stock has done very well for the fund. So as this chart shows you, the stock in dollar terms since 31st March 2023 has returned almost 460%, which is outsized returns. You don't see these kind of returns in other stock markets in say other emerging markets in this part of the world. So basically, we've been buying this stock. We've been holding this stock since 2019, but we've been accumulating the stock, especially in 2023 and 2024, which is close to the bottom. And it just shows you the kind of opportunities that are available and also shows you our thinking. We are long-term shareholders. We don't buy and sell every 1 month or 3 months. The portfolio turnover for our fund is less than 20%. So again, this is an example of how we think about stocks and how we generate returns for our investors. And as I mentioned, the fund's PE ratio at 7.3 is almost close to the all-time low, while the fund's NAV is at all-time high. So again, shows you the attractive risk-reward ratio for investors. And as the tables on the bottom show you, the valuations of PE ratios in our market is extremely attractive, pretty much all less than 10 times, even if they're above 10 times, slightly above 10 times, while the table on the right shows you emerging markets in Asia, India more than 20 times, and the other markets also quite expensive, close to 20 times. So big discount of valuations in our markets. But at the same time, I would argue that the growth profile, the demographics, and the risk-reward ratio in our markets is, if not better, equal to emerging markets in Asia. And also, it's not just about generating good returns, but also generating returns at low annualized volatility. The annualized volatility of the fund's inception is only 10.6%. So as this chart shows you, it's well below all the other benchmarks mentioned on this graph. And the main reason for that is, as I mentioned, we're on the ground, we're active investors, we are completely benchmark agnostic, and that's the key reason for having low volatility at the same time good returns, because of our active investor strategy and being on the ground on a regular basis. Also, correlations are quite low. Correlations of the AFC Asia Frontier Fund with the MSCI World Index is 0.5. While if you look at the correlations of the various countries with the MSCI World Index, they're quite low. Iraq is negative. Bangladesh is 0.04. So what happens in Iraq doesn't affect Vietnam. What happens in Bangladesh doesn't affect, say, for example, Sri Lanka. So again, a very strong diversification opportunity for investors. And a big picture view on a combined basis, as I mentioned, the GDP of our economies, the population of our economies is quite large. The total GDP of our universe is $2.6 trillion almost, and the total population of our universe is almost 770 million people. So again, a large universe. For example, Bangladesh and Vietnam have a GDP of close to $500 billion. Uzbekistan, as I mentioned, is growing its GDP at 8%, and population of Bangladesh is almost 175 million people. So it's large, it's young, you've got scale, and that really helps us to pick good stocks for the long term. And also, supply chain relocation is a reality in our markets. Bangladesh and Vietnam have been the key beneficiaries of the global supply chain relocation. Bangladesh is now the second biggest garment exporter after China globally, and they've gained a lot of market share on China. Even Vietnam has gained market share on China garment exports. Vietnam is now the number one garment exporter to the US after China. And also the chart on the right, Vietnam's exports to the US have almost tripled since 2017. Again, because of global supply chain relocation, because of many Chinese companies moving their manufacturing activities into Vietnam, and Vietnam being the key beneficiary from this global supply chain relocation. On the investment strategy, which is very important to us, how do we manage the fund? We start with a top-down approach because we want to get the country allocation right. We want to have capital allocated to countries where we're positive on the macro outlook, or we feel the macro is going to improve sequentially over the next couple of quarters. We don't want to have capital allocated to countries where the macro is negative, we're not confident on the politics or the macro situation, or we feel the macro is going to deteriorate over the next couple of quarters. Once you're comfortable with the country allocation, then we select stocks based on a value and growth at reasonable price. And how do we do that? We have more than 3,000 listings across the country universe. We funnel them down to 200 companies, which is the focus list based on various criteria, based on various valuation and fundamental criteria. From those from the focus list of 200 companies, we have built a portfolio of 50 to 60 companies, predominantly in the consumption space. Could be consumer discretionary, consumer staples, healthcare, telecom, or financial services, because of the attractive demographics and long-term consumption themes in our universe. And how do we manage risk? For us, managing risk is also a very important part of managing the portfolio. It's not just about generating very good returns or having low volatility, but also at the same time managing the risk on a big picture basis. So corporate governance risk for us is very important, and that's why being on the ground is very important. Sitting on a Bloomberg, looking at Excel sheets, you can't really assess the risk of how well companies are run or how well governments are run. So we're on the ground meeting companies, as I mentioned, more than 200 company meetings a year between me and Thomas. Concentration risk: the fund stops building a position at about 5% of AUM, and we stop slicing at about 10% after price increase. And how do we look at political risk and currency risk? I mean, both come back to my point about top-down country allocation. We look at where the country is from a macro basis, on a political basis. Are we comfortable where they are in the economic cycle or the political cycle? And therefore, that's how we assess political and currency risk, and to take a call on a big picture basis, on a top-down basis, on the countries we invest in. So I just want to conclude by saying that the AFC Asia Frontier Fund performance has been extremely strong, especially last 3 years, because our economies have been doing very well. Again, the fund's P ratio is at all-time low, while the NAV is at all-time high. And yes, you had some hiccups or some headwinds because of the conflict in the Middle East, but we had a very strong April. The fund is up about 9%, despite the concerns last month during the war. And that's because many of our countries are in a very strong position from a macro perspective and a political perspective, and they're well positioned to recover or to have pretty good growth rates and earnings growth over the next 3 to 5 years once there's some de-escalation in the Middle East. So I expect our markets to do even better or continue with the strong returns once there's de-escalation in the Middle East. And with that, I'll happy to take any questions. And very quickly, I just want to add that I'll be in the US to meet existing and prospective investors next month. So if any of you have signed in for the US and want to meet with me, please feel free to drop us a line anytime. Thanks.